With increasing digitalization, cybersecurity threats are a growing concern for the banking sector. Cyber attacks can result in reputational damage, financial losses, and legal liabilities. Secondly, the banking sector is highly competitive and banks may face challenges from new entrants such as fintech companies and other non-bank financial institutions. Hello and welcome to VAR India News Hour. All it seems, risks to financial stability have increased and called for continued vigilance, although actions by advanced economies have calmed market stress. International Monetary Fund Chief Kristalina Georgieva reiterated her view that 2023 would be another challenging year, with global growth slowing to below 3% due to scaring from the pandemic, the war in Ukraine, and monetary tightening. The change in the regulatory has impacted the profitability and operational efficiency of banks. For example, increased regulation may lead to higher compliance costs and lower profitability, which has witnessed the collapse of US-based Silicon Valley Bank. A week on, a second US regional bank, that is Signature Bank, has been shut down. A third, First Republic Bank, has been propped up. Credit Suisse has been averted after it was taken over by UBS. The recent stress in the banking sector and the possibility of a follow-on credit crunch brings the US closer to recession. Credit Suisse's troubles highlighted the risks faced by banks that engage in complex financial transactions and the importance of effective risk management and oversight. Since all banks are interconnected, fears of banking contagion are impacting markets. Thus, far in calendar year 2023, the banking index has been an underperformer. Among stocks, State Bank of India and Punjab National Bank have been the worst hit, falling over 15% each in the calendar year 2023. At the same time, IndusInd Bank, Bank of Baroda, Bandhan Bank and Axis Bank have lost between 11 and 15% during this period, ACE Equity data shows. Given this present situation, banking stocks not only in India but globally will underperform. We expect RBI to keep close watch on liquidity issues, counterparty exposures and intervene as necessary. Let's look into today's headlines in VAR India. Government approves setting up of electronics manufacturing cluster in Karnataka. Union Minister of State for Skill Development and Entrepreneurship and Electronics and IT, Rajiv Chandrasekhar, announced the approval for setting up of Rs 180 crores worth electronics manufacturing cluster, that is EMC, at Dharwad, which is expected to create over 18,000 jobs. The project, which is being set up at Kotur Balur Industrial Area in Dharwad district of Karnataka under EMC 2.0 scheme, is expected to catalyze investments to the tune of over Rs 1,500 crores soon. Silicon Valley Bank acquires First Citizens Bank. As per the Federal Deposit Insurance Corporation, the Silicon Valley Bank will be sold to First Citizens Bank. In accordance with the agreement, First Citizens will assume all deposits worth $119 billion and loans of SVB. Depositors of Silicon Valley Bridge Bank National Association will automatically become depositors of First Citizens Bank and Trust Company. Parts of Twitter's source code leaked online. As Twitter struggles to reduce technical issues and reverse its business fortunes under Elon Musk, according to a legal filing, parts of Twitter's source code, the underlying computer code on which the social network runs, were leaked online. Twitter moved to have the leaked code taken down by sending a copyright infringement notice to GitHub, an online collaboration platform for software developers where the code was posted. Paytm wins regulator extension for payment aggregator license application. Financial technology company Paytm Payments Services has received an extension from RBI to apply for a payment aggregator license and aims to reapply in about 15 days. Paytm Payment Services, in the meantime, can continue with the online payment aggregation business for its existing partners without taking on any new merchants. In November, the banking regulator had declined a payment aggregator license for the 197 Communications unit that owns the popular Paytm brand. Bharti-backed OneWeb launches 36 satellites with ISRO and NSIL. Bharti-backed OneWeb confirmed the successful deployment and contact of 36 satellites launched by New Space India Limited, that is NSIL, from the Satish Dhawan Space Center, that is SDSC SHAR, in Sriharikota, India. This is OneWeb's 18th launch, its third this year, bringing the total of OneWeb's constellation to 618 satellites. By the year end, OneWeb will be ready to roll out global coverage, enhancing its existing connectivity solutions that already live in regions north of 50 degrees latitude. That's all for now. Please like, share, comment and subscribe to VAR India News magazine. You can download the VAR India app from Google Play Store and Apple App Store for the latest news and updates. Stay tuned. Thank you.